It's now recording. Right, let's do this. So as you know, I have been playing around with fractals and stuff like that, and I discovered certain patterns within the KAS sort of price action. So first of all, I guess moving forwards, we got the what I labeled 1 to 7. So we have, if we take this for example, we have the all-time high 1, comes down into some sort of double bottom 2, spring 3, retest the bum 4, up into trap 5, which is some sort of wobble, some tree shake to scare the shit out of everyone to sell. Then we pump up into pre-high 6, then all-time high 7/1. Okay, so that is, that has not broken down. And what you'll find is that there are mini 1 to 7s within bigger 1 to 7s, if that makes sense. And so ever since I've done this, something's been niggling at me behind, in my head, going, this is nice, but it's something not quite right. And then moving forwards, I then discovered, I thought, wait a minute, is there something else I'm not considering here? Because there seems to me like 3 or 2 proper all-time highs, really, and cycles that lead up to that, and that we're actually in the middle of the third cycle, so to speak. Remember, KAS is only 18 months old, and the thing you have to remember with a brand new coin where the emission schedule is aggressive is that the cycles won't be evenly timed during the aggressive emission cycle of a coin. So if you go to the Kaspa website, go to Tokenomics, you'll see this here. So this is the emission schedule for Kaspa, and it looks identical to Bitcoin, except the timing is different. So with Bitcoin, the last Bitcoin will be mined in the year 2140. But the curve still looks like this, whereas with KAS, it's 2037. So you can click this, scroll right to the bottom, and it's going to be, sort of early-ish, springtime 2037, right? So it's very similar to Bitcoin, but not similar, if that makes sense, in the fact that it's just more aggressive, a lot faster. So we're approaching, we're getting very near the percentage already mined and floating in the economy to Bitcoin. We're getting close to that. It's still going to take a little bit of time till Bitcoin and KAS on the same sort of percentage circulating supply, but it's getting there. So during this aggressive phase, cycles are going to be all over the place. In fact, they're going to be a lot faster, if that makes sense. And it's going to be, and you can't have like the 4-year cycles with Kaspa, because it's a linear, it's a constant rate emission. So you have a rough halving every year, but every month, if we look at this again, you can see every single month it drops and drops, and it's a consistent sort of reduction in emissions. So that's been niggling at me, and then I thought maybe these first 2 cycles are, it's just, it's expanding until, Kaspa gets to sort of 80% circulating supply, and then it starts to, sort of plateau. And seeing as though it halves every year, I like to think, I'm of the opinion that eventually the Kaspa cycles will be every year. And whereas Bitcoin, they halve every 4 years, so I think the halvings, that we have a 4-year cycle of Bitcoin, 1-year cycle with Kaspa, in my opinion. And I was, whenever I'm just bored, I'll just have the charts open and I'll just dick around. And I was dicking around the other day, and I was looking at Kaspa, obviously, and I was thinking, wait a minute. Maybe I've mislabeled Trap 5. Remember, Trap 5 is that the shenanigans that scare you out. And I realised, okay, because this came off the back of my sort of Bitcoin flat top research. Because as I went through last trading pub, in Bitcoin's bull cycle market conditions, there have been 12 rising compressions in a rising market, but with a flat top. And in all 12 of them, they exploded to the upside, which is why crypto in general, whenever you see a flat top, it tends to, or flat bottom even, it tends to just get breached. And then here we go. Then I was looking at these and I was thinking, oh, wait a minute. Obviously, let's go on to the linear chart first. So we had some sort of high. Again, I can map out the fractals, 1 to 7. This would be 1, double bottom 2, spring 3, retest above 4. We have trap 5 around the previous all-time high. Then it pumps up for pre-high 6, then 7. So that's everywhere. I'm not going to mention that again. But I realized trap 5 actually is a rising compression with a flat top. So here's the first one. Rising compression, flat top around the previous all-time high, then it explodes. Then we have, another cycle. As you can see, the double bottom again, etc., etc. But obviously, things are getting bigger now because, remember, patterns and the volatility and the scale of a candlestick will increase as market cap increases, right? So if you go back to, Bitcoin way back in the day, and then zoom into normal sort of candle size.
Say that again, sorry.
So as the market cap increases, the candles by their very nature will also increase. So here's Bitcoin back in 2013. If I scale to the normal zoom that I have, and then don't adjust the zoom, what you'll find is that volatility increases dramatically. See, I'm not adjusting the zoom, but because Bitcoin is becoming a bigger market cap, there's more volatility, more trading, etc. Eventually, look at the bars, they become so ungainly. I mean, I haven't adjusted the zoom here. Does that make sense?
Not percentage though. Absolute, yeah, but not percentage.
Yeah, absolute, but not percent. Yeah, exactly. Yeah. So what this means is that the patterns itself, any patterns that the chart will make, will also get dramatically bigger as well. I mean, look, we're only in 2017, and each candlestick covers a whole screen basically. I mean, it's just ridiculous. So, and we're only at like 8K. So it's the same with Kaspa. Like when you look at the market cap increase, so market cap, go to max, it's been quite dramatic. Obviously, yeah. So, for the first, I mean, it's only 18 months old, but it spent basically most of its life under $250 million market cap. And then all of a sudden just went off to the races, and it is still growing. And so, look at this. This is the first trap 5, flat top, rising compression in a rising market. It then explodes. We then have another cycle. But guess what? The trap 5 is now much bigger because there's more market cap. It's just there's more volatility, etc. And we have trap 5 in and around the previous all-time high. And guess what? It pumps up pretty horrendously into pre-high 6, then the all-time high. Then we have another cycle. Again, we got another big double bottom here. Spring 3, retest the 4. And what's forming now is because we're over $1 billion market cap. So like we're roughly 4 times bigger than we were down here. So it doesn't surprise me that this trap 5 is 4 times bigger or more. I am now of the opinion that this massive compression, whether you want to call it a flat top, I mean it's near enough, damn it, as a flat top, is that this is trap 5. We're still in trap 5. Now, the interesting thing is that look at the expansions from trap 5, so the flat top compression to the all-time high. 14 days. 14 days. Is the next one going to be 14 days? I mean, obviously we're all like plucking at straws here because we've got 2 data points. So from a statistical point of view, this is as this is as heretic as reading tea leaves. If you're to speak to a statistician, But I just think it's uncanny. Every time we had the flat top explosion, it's been 2 weeks of crazy bull market, then it runs into the next bear market. So at what point does it explode? Well, like with any compression, it explodes towards the apex, as you all know. This one, it was slightly, I would say that's a normal explosion or expansion from the apex. Here, it went right up to the crux before it expanded out. And this one, who knows? So part of me is thinking, wait a minute, what if we have an expansion towards the apex here, around sort of mid this month, so in a couple of weeks' time, and then it booms again for 14 days. So let's move this back. That brings us to the 26th of November, roughly, or if, it goes right to the end like last time, that brings us to sort of the 3rd of December. So my original fractal models way back, months ago, are not incorrect. They're singing a slightly different harmony of the same song, if that makes sense. Because I have been saying for months that if my models are correct, we should have the next big pump up before end of this year. And I've been saying 15 to 20 cents, for a while now. Now, obviously, this is a linear chart, and I've done that on purpose. I just want to show you, it looks horrendous, doesn't it? Well, not horrendous, it just looks unbelievable. So now, let's look at this on a log chart. It doesn't look as crazy, and I've put a bit of time into this, and I'm still not happy with it, but we'll get there. So, this was the original, expanding thing. And I think, the cycles will expand until it's every year. And so this is what I think, I haven't finished labeling this, but let me walk you through this. So if we really zoom in here, we've got, the labels 1 to 7, etc., etc. Wait a minute, have I missed? Yes. So what I've, actually, the KAS chart here and this log chart, this one has more data. I'll show you this in a sec. But there is, when we look at more data, oh dear, I'm moving around things I shouldn't be moving. There we go. Control Z, there we go. Phew. The very first, so to be clear, the very first expansion, and by the way, this is data we haven't seen on that previous chart. This is the very first cycle. Again, the fractals are still there. We have trap 5 around the previous high. It wasn't a flat top though. This was a symmetrical compression, and the expansion lasted 28 days. But then the other expansions lasted 14 days. And so we don't have a clear halving schedule like Bitcoin. We're all expecting April 2024 for the next Bitcoin one. All I've done is I've measured things from peak to peak. So if we take this peak to this peak, it's a 90% uplift over 81 days, which is 2.66 months. Then the next one was 190, sorry, ignore the percentages here. That is the percentage uplift from trap 5 to the all-time high. But this 332% uplift is from that all-time high to that all-time high. And that was roughly 4.14 months. So similar-ish. I was thinking that, is this, 2 months, 4 months, etc. Again, with a fresh set of eyes, I've come to roughly the same conclusion. And then it brings us to where we are now. So I've drawn in these green bars. This is what I think is most likely to happen. I think the next uplift, I don't think there's really any relationship here. And you'll see why. But I think it's going to be between 15 and 20 cents, like that hasn't changed. I think the distance is going to be roughly just over 8 months. Again, my original hunch of 2, 4, 8, and then maybe 12, again, is not unchanged there. We're in a much bigger trap 5, and assuming a 14-day breakout, that brings us to rough, where I've given myself some flexibility here, 3rd of December plus or minus 10 days. That's sort of where I'm drawing my line in the sand. So that's quite nice. And then I took it back to the charts, and I tried to, because I've got my nice fractal model that I've done with Bitcoin. This to me looks really simple to read. With KAS, I haven't come up with a peak to low multiple yet. Or even, nothing happens on a set day with KAS. Or with Bitcoin, the highs and the lows are always around the 1st of December, always. And as you can see, Bitcoin is following this sort of logarithmic curve. So what is it with KAS? I've done something similar, so let's go to the daily chart and zoom in so it's much easier to see. So we've got a similar sort of, it's like a logarithmic regression band. And I find it interesting that if you go to Bitcoin, the logarithmic regression band was actually used as support for most of its life. So I'm flicking all over the place, sorry. So with Bitcoin going from that low there in October 2011, the logarithmic regression band there has basically been used as support throughout most of its life, all the way until it breached in June 2022. So this hasn't broken yet. So are we going to get above it? Most likely, but it's not going to be, in my opinion, as crazier an excursion from this as before. And I've talked about this chart many a time. But with KAS, I think we're probably doing something similar now. So we've got this log curve, this big black line here. And guess what? The market has sort of reacted to this as support. Now, will it breach? Yeah, quite possibly. One day, someday. I don't think now is the time. And then if you just to Control C and Control V this, the same curve, guess what, has acted quite nicely as a resistance band as well. Resistance, a bit short on the resistance there, resistance. And so it's not as pretty as the Bitcoin cycle, but what I've done here just to break it up is we've got the bear market from all-time high to the low, and the yellow band, what I've done is how long does it spend below the previous all-time high. By the way, I haven't really found too many patterns other than the fact that it was, now bear in mind this is the daily chart, so 15 bars is 15 days. So it took 15 days to breach that previous all-time high into trap 5, then all the way up. Again, the yellow band was around 14, 15 days, but as I said, the first couple of cycles I'm really not putting too much weight on because the emission curve was aggressive. But what we can see is that the fallout is I guess similar. We're looking at sort of a 70% crash really, depending on what chart you're looking at or what exchange you're looking at. So this needs to be oopsie daisy. This one needs to be a bit lower. But yeah, okay, makes no difference. It then spent 2 months sub all-time high again into trap 5. So here's one pattern I found. As it breaks the previous all-time high, guess what it does? It enters trap 5. Here we go. It breaches the previous all-time high, enters trap 5. Here's another yellow period. It finally breaches the previous all-time high, but it enters trap 5. Look at this. This one again. The moment it literally just skims the previous all-time high, guess what happens? Trap 5 starts. And so, in my opinion, there is a cycle here, and I think we're on the cusp. We're on the cusp of the cusp. I think we're literally gonna see. Well, I can't say gonna. In my opinion, I think we should see some sort of breakout over the next 2 weeks. Literally any time from now until the end of this compression, really. And if that were to happen, I'm expecting maybe not right to the top. I've been a bit pessimistic here with the curve. I mean, most of the time it has hit this curve, other than this once here. But assuming it doesn't quite make its way up here, this is still sort of 18-19 cents, which I think is pretty cool. And then looking at the eventual cycle pivot, sort of a 54-ish, and I've just taken that to the bottom of this regression band. That's all. I mean, it could indeed go a lot lower, but yeah, something like this, and then yeah, I've got a feeling that see, obviously I've drawn it like this, but part of me also thinks actually maybe this could be a little bit higher, because if this was high, let's say it got to sort of 25 cents, it would then be a lot longer for, you know, let's say it was this yellow band would be more like that, and then because previously the yellow band has always led into the trap 5, so that would, you know, I think this yellow band could be a lot longer than we think. So obviously with the whole projection type stuff, I think, I don't know, it could be something like this, you know, 125 days in the yellow band, who knows, but let's just, yeah. So they're my little thoughts, and then obviously it takes us to this time next year. We're looking sort of one, you know, all the way up here. So that was my little realization this morning. I've been on this for a few hours. Again, although I feel a lot closer to the aha moment, and I wouldn't say this is an aha moment, this is more of a, okay. This was my gut feeling, my hunch. I've now put a bit more meat and bones to it, but I still feel there's something quite missing. But like with any model, the more data points you have, the more accurate it becomes. So, you know, personally for me, the next validation point is a breakout from trap 5 to the upside, and that's crucial here, to the upside within 2 weeks. If that happens, then this adds a lot more credibility to this model. Very similar to my Bitcoin one. So, for example, if we take this picture a few weeks ago when I just screenshotted it, you know, because I've got this fib retracement. Mind you, I haven't done a fib retracement on the KAS chart yet. But the 38.2 fib retracement from the previous high normally gives us the Bitcoin price at or before the halving, and it's been pretty much bang on. And so my model, I was saying that Bitcoin should be at 35k at or before April 2024. And when we look at this now, what's just happened with Bitcoin? We have already pumped into that 35k level. Look at that. So part of my projections was that we would have, as you can see, this big runoff candle into the orange line here, and we did, but I was literally just offset by a teeny weeny bit, so it's really more like that. So for the next thing I think for Bitcoin is that we're most likely, in my opinion, going to be dicking around sideways 35 to 30k until April. That's what I think. I know everyone's getting really excited about the spot ETF at the moment, and there's all sorts of rumours going around that, oh, we're like a month away or whatever, but I don't know. I don't know. I can't see anything happening until Gary Gensler gets the hell out of his office. And I've been in this, and like the other reason I'm slightly reticent about this being, you know, the start of the proper bull market is that I've been here before, folks. I've literally been here before, where everyone is getting thumb and bum, mind in neutral, happy as Larry, and then all of a sudden the market just dumps. So look at this one. Like, we were here like literally a few years ago. Everyone got completely exuberant when Bitcoin obviously bottomed out around 3k and then had this crazy meteoric rally from 3k to sort of 13. Everyone thought, oh no, it's back to all-time highs. This is the bull market. And I remember distinctly, I was not in crypto. I was literally just like, nah, no. And then we had, 6 months of pain, really, as the market just went, halving and then up to the upside. This is the only cycle with Bitcoin where the exuberance, I think the cycle we're about to experience is going to be more like this one. And it was actually this cycle which I did my ghost bars from. So this blue sort of ghost feed is actually from this cycle, which is what I actually think was most likely to happen. Because at this one we had certain technical levels which it had to take control of. So it had to take control of this sort of $316 level, which it did. It pumped it aggressively and it Kobo'd it, and then it sat nicely on it, making a new sort of Everest base camp before making another base camp, etc., etc. And I think crypto is more similar to this cycle. So that's what I think. So, and the other concern I had is, like, everything looks really bullish at the moment. Everything looks positive. There's just good news coming out of everywhere. The thing that had really concerned me is stocks, right? Because, you know, I've put some cryptic posts in Telegram over the last couple of weeks about how stocks look neither bullish nor bearish. I cannot say. You can only make your own mind up. But obviously, if we get rid of this, everything has looked pretty interesting. But guess what? We've got another pausing of rates, and we all know what happens when rates are paused for at least a couple of quarters. It's boom time again. So, as I've explained in many cuddles now, and I will continue to show those three charts, when rates are paused, stock markets go up. Look, we had a sigh of relief on pretty much every main market. But one pattern, and all I'm going to show you is a pattern, okay? I'm not saying to buy or sell the S&P 500. If you were to take a little screenshot, actually, let's just do this. No, let's start in the past. Let's go back to the tech bubble pop. Here we go. And what we have, if I just take a little screenshot from something like here to here, I'm just going to doodle on this because this is the past. I'm allowed to talk about what happened in the past, even though it's a regulated asset, so that's fine. So what we had, and I'm just going to be quite bland here, is that we had some form of neckline and a topping pattern, whether it's a double top. I mean, here technically this is NDV, non-directional volatility, but I mean, I guess you could say there's some sort of pattern there. But what happens? We breach it here. We then have a Kobo here. It pumps down, and then we have a dead cat bounce, where the market just goes wee, right? That's the typical pattern, and it doesn't matter whether it's the S&P. Like, normally whenever you see a secular high leading into a secular bear market, then the pattern is the same. It could be soybeans to the S&P. I've got one tiny bit of coffee, then I can give you my full attention. I'm trying to drink this before it gets cold. Shitty instant coffee because my Nespresso machine, it's the third Nespresso machine and it's broken again. It must be something I'm doing because I've gone through 3 freaking huge Nespresso machines now. Anyway, so we've got this pattern, right? Oh dear Lord, come on. So let's fast forward to 2008. Oh, that looks similar, doesn't it? Here we have a topping pattern, a clear neckline, a breach, a Kobo, then a dead cat bounce. What do we have here? Head and shoulders, maybe a triple top, neckline, a Kobo, a dead cat bounce, and then capitulation. Pretty similar, don't you think? Pretty damn similar.
Extremely similar.
Eerily, yep. And what do we have here? Oh, hello. Again, I'm not telling you that stuff is going to happen, but if I was to get my 5 and 7-year-old to go, right, can you try and draw this pattern on this pattern? They would probably go, I don't know, Dad, something like this. We have some sort of topping pattern. We have a breach of here. We have a Kobo. Now, the only thing that, or actually, maybe this is the Kobo. I don't know. Could this be the Kobo? And then a dead cat bounce? And then capitulation? Who knows? Now, that was my feeling up until a couple of days ago when rates were paused. Because now rates were paused. That basically completely buggers up this chart, doesn't it? And by the way, this chart is the same on the Dow. Like if you go back in time, that is not. It won't show you. Or the Nasdaq. It's not as clear on the Nasdaq, but if you look at previous Nasdaqs, what's happened? Similar thing. And here we had a double top. Yeah, it's not as similar, but yeah. So I don't know. Maybe I think with rates being paused, this is just kicking the can down the table, go down the road for a bit. Maybe we can see a bit of life in this, because if you were to show me this chart like this, and you wouldn't tell me what it is, all I would say to you is that, okay, based on just pure charting, I would probably go topping pattern, breach, Kobo, and then most likely, yeah, that. Honestly, that is, in fact, that's pretty much the inverse of this, isn't it? In fact, that is identical, pretty much. It's funny that, isn't it? So if you were to just try and trick me and go, hey, can you chart this up, Simon? What do you think is going to happen next? That's actually what I would say to you. I would say there's like a mini topping pattern, a clear neckline, which it's Koboing off, and then it's going to continue dumping like the shitty thing it is, whatever this is. I mean, I'd look at this chart and go, this looks like the worst crypto shitcoin I've ever seen. Looking at that chart. But when you invert the scale again, then it's like, oh, actually, shit. So that's the only sort of thing in my bonnet at the moment. And so if we do see a rate pause or bull market now, or mini bull, what's that going to do for crypto? Well, obviously crypto is still 75, maybe, let's just say 75 to 90% correlated to Bitcoin, or Bitcoin's correlated to the stock market. So does that mean Bitcoin's still going to be a bit bullish? No, I don't know. The trader in me thinks, wait a minute, we're a bit overextended right now, and so we need some sort of pullback, but we just haven't got that just yet. So unfortunately, like you already know, trading is always full of like conflictions. So just a quick summary here of what we've covered over the last 37 minutes is that I think KAS cycles are like this, and if we look at this chart, here we go. Yeah, I believe that we're close to some sort of pumping over the next couple of weeks, and if so, how long do you think? Just quick knowledge check. How long do you think this pump should last for? If history is any repeat, 2 weeks. So, yeah, basically, if we do see a pumpage or a breakout from trap 5 over the next 2 weeks, then we've got most likely 2 weeks of pumping, which takes us to sort of early December. And you know what? That probably isn't a fair. That's not a bad place to do a bit of a sidestep. Potentially, maybe not a full sidestep. Maybe it's a case of, right, I'm taking 50% of your KAS pot out for a sidestep, and with that 50% chunk, reallocating into other crypto to balance your portfolio a little bit better, and then keeping some, to re-enter if there is, let's say, some sort of 50% pullback of some sort. But bear in mind, I could be wrong with the price thing. There could be a situation where I'm correct with every part of this, except the breakout is only up to 10 cents or 9 cents or something like that. So that's still a reality. So what could easily happen is, it could pump up to 10 cents, have a 50-odd% pullback down to these previous highs. But I don't know, I think it's unlikely. So they're my two thoughts. Or they're my sort of 2 cents. I think when you look at KAS against Bitcoin on the log chart, I think this is more likely to happen. Obviously, it keeps breaching these big old support levels against Bitcoin, obviously. But yeah, and this rising channel actually played out pretty spot on, actually. But I think this is more likely to happen, where it's just going to try and attack this level again. So yeah, don't get me wrong. By the way, I know you think I'm some sort of KAS nutcase, but I do want some Bitcoin in the pot, and I do want some ETH in the pot, because you have Bitcoin and ETH ETFs literally gagging to be launched. Now, as ETH is a much smaller project than Bitcoin, I mean, I still see a big pump coming with ETH as well. If the ETH ETF is launched, what do you think alts will do? Seeing as most alts follow ETH, I see big pumpage coming forwards. So yeah, so at the moment, my first thing, really, the imminent things I'm really eyeing up right now is KAS breaching KAS 5, trap 5 over the next couple of weeks, and then a 2-week pump. And I'm eyeing up an entry into DNX. So yeah, I'm studying this DNX to KAS chart quite a lot at the moment. So we're already in this hole, and it's fallen nicely into this hole. At one point when I first drew it, it looked quite unlikely, but we're now in it. So now it's an execution time. So I know I said I'd probably put 1% of the pot into DNX at this level. I'm re-evaluating, because if we're going to get a KAS pumpage over the next couple of weeks, this chart would most likely, let's say DNX doesn't pump, I think we're looking for, more like this second circle to be hit.